So what are we going to talk about today? Where has fintech investment gone, and what are the underlying trends? The very first thing is my legal disclaimer. Nothing I say is any form of investment advice, please. So the talk, the fintech investment trends, 2017-18. I'm going to have a look at how VCs and corporates invest in blockchain and Bitcoin. And then I'm going to consider this brand new phenomenon of ICO and tokens. So where are we? In the last 12 months, the global fintech ecosystem has grown by a third. This growth is throughout the whole globe. It's generic growth. It's absolutely tremendous, $37 billion. Looking at it year by year, if you look at the figures between 2015 and 2017, you see an ecosystem of about 30 billion a year. But then you look at the 12 months to June 18, it's popped up to 37 billion. And the first 6 months of 2018 has been 20 billion. But if I add on Ant Financial's 14 billion raise, then we're up at 34 billion against a running rate of 37 billion in just 6 months. Fintech investment has momentum. Looking at it by region, half of the investment is in the United States, 18% of the investment is in Europe and the UK, 18% of the investment, excluding the very large Ant Financial raise, is in China, then followed by India at 6% of the investment. Australia and New Zealand are very similar investment ecosystems of between 2.5 to 3 billion. Southeast Asia, South America, and Israel are about 1.5 billion. Singapore, Hong Kong, virtually the same size at about 1 billion. And then you have the rising ecosystems of Africa and the Middle East. Where has the money gone? A third of fintech investment has gone into loans. 22% have gone into payments. So that's over half, 55% have gone into loans and payments. But then you can see all of the other market segments of financial services with fintech innovative investments. I won't go through them, but just look at the scale of them. Virtually every market segment has at least $1 billion invested in it to bring innovation into financial services and related professional services. Looking at the various fintech ecosystems, the very first one is North America. So I thought North America had stabilized at about a 10 billion ecosystem. But in the first 6 months of 2018, they've done 10 billion. I thought China had stabilized around a 10 billion a year ecosystem in 16 and 17, if you included the Chinese IPOs in North America in 2017. But then, if you look at the 2018 number for China, you see a very much lower figure, but again, if I add Ant Financial, it's the largest global ecosystem. The UK ecosystem is about 3 billion. Europe ecosystem is about, this is investment per year, 3 billion. Others, surprising enough, that's about 3 billion. And India is about 3 to 4 billion investment per year. By market segment, loans are the dominant. Direct lending is the dominant market segment. Somewhere between 8 and 10 billion a year. Loans peer-to-peer seems to come off from its 2015 investment of 3.1 billion down to a running rate now of about 1 billion, but that's understandable. Peer-to-peer platforms do not demand large capital inputs. Payments seems to have peaked at 7.5 billion. Its running rate is 5 billion. Process, which are the internal processes, cloud-based processes, round about 2 to 2.5 billion. Build a Bank now is running at 2 billion a year, and insurance has popped up from 1.5 billion in 12 months, that's last year's number, to 1.5 billion just in 6 months. I think the InsurTech is marching on. The United Kingdom, and I have larger numbers than what's been quoted. If you look at 2016, which was the year after Brexit, that's 1.4 billion investment. 2017 popped up to 3.2 billion investment. The last 12 months running rate is 4 billion investment, and the first 6 months of this year is 1.8 billion. There have been significant large investment made in UK fintechs of a scale which, when I first got involved in the scene 12 years ago, are unimaginable. 280 million, 200 million, 100 million raises were unthinkable for a European startup to actually make. Looking at fintech enablers, you have devices, cloud, and open source software, but I contend to you that there's a new data technology emerging based on deep learning, soft learning, and hardware. The mobile network people were on the threshold of 5G, and what the mobile network operators have done in emerging economies with text-based mobile banking is quite amazing. Open banking is now here and will only get more extensive with the complete implementation within Europe of PSD2. But then you've got the two real enablers of fintech, which is effective governance and effective security, identity, and trust. Without governance and without security, you don't have anything. So I'd suggest if you want a long career in fintech, maybe looking at cybersecurity or governance areas could be highly productive. Now, I think there's been 3 phases of fintech so far. You've had phase 1, which we're probably in year 8 of, which is disintermediation. Phase 2, which is transactions, process, and platform, which we're probably in year 5. And now I detect a further change, which could be a systemic change towards global ecosystems, powered by blockchain, artificial intelligence, new data paradigms. And this is my original disintermediation model. Cost and delivery, the African mobile phone model, you can deliver financial services to people who earn $10 a week and make money out of them. Data stacks are disintermediating through APIs, open source data. Channels are becoming hyper-personalized in a multiplicity of ways, and human capital within financial service is becoming disintermediated, that the brightest and the best no longer want to work for a bank for 40 years. They want to get out of the bank and do a startup. And then you have the internet giants prowling around who want to own the financial conversation. And they've developed a whole series of objects to actually try and capture the financial conversation. And I'll focus on conversations and use the example of Alexia. There are other conversational finance systems available, but look at the range and depth of them which are there. And financial services is also heading towards digital immersion. The technologies of gaming are going to find a way onto the trading floor and into corporate analytics because they are so powerful as a communication tool and as an analytic tool. I just want to look at one of the internet giants. Many of you will be very familiar with Ant Financial. In the West, we're probably not as familiar. But I just want to look at Ant and then raise a question. This is Ant Financial's ecosystem, and I think that the middle series of numbers are the important ones. 622 million payments, 330 million people UABAO, the largest overnight money market account in the world, bigger than anything JP Morgan, Goldman Sachs have got. Financing, at least 100 million. Insurance, Zongang, 400 million people. Credit Sesame, 250 million people plus. So enormous scale. But I think the important thing on that slide is the section of the data empowerment, the way that data is used to deliver these financial services. And here is Ant Financial's software stack. People say data is the new oil. I say you've got to extract it, and you need a software stack like this, and you need a board and a corporate culture that can actually use this. And the way, and if you look at the deliveries from that software stack, 256,000 transactions per second on Singles Day last year. And Ant's ecosystem development, they've at least done 52, you can't read that, but they've at least done 52 transactions. Alibaba as a whole have done 174 transactions, but that is a brilliant example of how you implement a corporate strategy of growth in fintech and financial services. No Western company comes close. And what drives it? Jack Ma. And it took me a long time to understand what drove Jack. Jack's a teacher. Jack's an English teacher, was an English teacher. And I saw him speak by video to students in Nairobi. Jack develops human capital. He's voracious at it. It's the thing which powers him. And he wants to give people opportunity. Young people, and there you've got a quote from Eric Jin, the CEO of Ant Financial, representing the little guy. This is what drives them. A remarkable culture. These things don't happen without a unique culture which renews itself and drives and develops human capital. So it occurs to me, and I could have used Amazon or Apple or Google as examples as well, that to succeed at scale in financial services, you may need to have a much larger ecosystem that does other things beside financial services. And you may need a different managerial style and computational stack, simply to be able to succeed in the world that we're approaching. UK, digital challenger banks. We've got a number of digital challenger banks in the UK. Maybe this year is the year where these banks start going. This is an example of Revolut's business ecosystem connected by API. Revolut is now up to 1 million customers in the UK, published last week. And if you look at this ecosystem, I just want to focus people's mind on a perfectly formed fintech, which is free agent, seed finance, VC finance, crowdfunding finance, listed on London AIM, and then it got taken over by Royal Bank of Scotland. I'd say that is a full set from my old city of Edinburgh. So 2018 may be the year that digital banking in the United Kingdom actually gains traction. There's some great companies there doing some great things. You'll hear from them in this conference. And I think the first signs are that they are getting to critical mass. So let's look at mobile money, mobile network operators. 700 million people use mobile money, basically text-based systems in emerging economies. But then if you add on China, you've got at least another 700 million and probably another 1,000 million there. A remarkable achievement. And what happens when you implement mobile money into an emerging economy? In 2006 in Kenya, you could get money from 4,000 places. Massive country, massive population. In 2018, in March, you can get money from 200,000 agents. And these can be just people standing at the side of the road. And the Kenyans express this much better than I ever could. They think it's magic that you can take your phone and then get hold of Kenyan shillings and then go and buy things. So let's look at how blockchain and Bitcoin, the investment trends, and how VCs and corporates have actually been investing in this new technology. But the first thing I've got to say, this is not only a technology. Blockchain's development depends upon the humans. And there are at least 300,000 people in meetup groups continually refreshing their human capital, their understanding of advanced computer science. And it's this community which drives the implementation of blockchain forward, not the fact it's a cute technology solution. You look at the investment levels, and guess what? They're going up. And in 2018, the first 6 months, you've got $1.4 billion going in, of which the majority is into blockchain solutions, but there's still some funding going into Bitcoin exchanges. If you look at some of the specific examples, and I just want to focus on the very bottom of the page there, that the average value of a Bitcoin or a blockchain investment is somewhere between $4 and $6 million. It doesn't take a lot of money to get one of these things going. And looking at the last 6 months' worth of investment, I think what seems to me to be emerging is a blended form of approach to blockchain investment. VCs and private equity are funding some of these business models and then looking at bringing ICO as the second stage, and very focused corporate and enterprise applications are being funded by private equity and angels and VCs. The large consortiums, and we had one of the representatives here today, I think this is a remarkable collaboration. I don't know if anybody's tried to collaborate with an investment bank. It's impossible. It makes cat herding seem an easy sport. But they are collaborating. Things are coming out of here. Trade finance contracts, letters of credit are being financed out of this. This is a remarkable collaboration, and it's just started. And is this real investment? When a company like Siemens invests in blockchain technology for a microgrid, I'm tempted to think this is real. Let's look at the ICO and coins and token investment trends and structures over the last couple of years. You can't talk about this without talking about tulips, the South Sea bubble, the dot-com boom. But I started to look at blockchain and Bitcoin in terms of graphical 3D visual representation. And something very curious occurred to me, mainly as a result from these images. These images come from the data science lab of Imperial College. And you can see them on YouTube. And the thing is, these move. These are alive. The squiggly images on the left-hand side are a virus attack on the blockchain infrastructure. That changed my perception about what blockchain and the ecosystem and Bitcoin and the ecosystem actually is. And I'll just go to the final point there, that I think it's a new form of economic connectivity, which allows people who couldn't be economically connected or process connected previously, now they can be. And it removes friction. Tokens allow you a completely different way of investing. I won't use the word investment, don't use the word investment, but of participating in an entity's economy. And you can exchange and create economic connectivity, which you could never do before: data storage, green energy, and sharing. And I think that users can actually understand the risks of this ecosystem. And here you have the market capitalization of all of the tokens and coins. And I call this my X chart, that the value this time last year at its high was 8.6x, and even today is 2.8x. So these markets have scale and they're global. And even if you accept there's been a crash, 2.8x might not be too bad. And again, I think we need to change our perception. It's not only Bitcoin. Bitcoin is 42% of all of the tokens and coins. Here are some examples of the multiplicity of coins and the capitalizations. 800 coins, last night's value 240 billion, 700 of the coins have value. There's more than one, that's the essential point. And ICOs, this phenomenon of ICOs, which really have taken off over the last 12 months. In 12 months, 800 projects. The token value is 16 billion in 8 months. And the running rate is now at 1,000 projects worth 22 billion. I think from my examination of the token value, maybe you need to say that the real external cash being generated here is somewhere between 10, 20 or 25%, because when you look into the individual cases, you find that the external cash is much lower than the gross value of the tokens, but still an incredible ecosystem has come from nowhere. But I got too hung up on the form. Is it a means of exchange? Is it a coin? Is it a store of value? I don't know. But then I thought, look at the function. What are these things for? What are the business models? And looking at the business models, you see the split between money and commerce. These are the 800 projects up to the end of May that have gone through. 800 projects, money and commerce, system architecture, content, process, money. The whole money ecosystem has ICOs in them. These are the underlying business models. This is where, if there is a value there, it will come from. The same in the systems, the same in content, the same in process. A multiplicity of processes using ICO and blockchain solutions. And even the FCA is there, that the latest Project Innovate cohort, 40%, over 40% use blockchain or DTL technologies. I think that's a sign. So tokens, it's the development of the business models, the ecosystem, the communities, the networks, the trust, not only the technology. And in summary, investment is buoyant, and I think 2018, it could be 30, 40, $50 billion worth of investment. And I think a new data paradigm is emerging. Governance, cyber, and risk management is more important than ever. You'll lose it all if you don't pay attention to this. Blockchain is being considered seriously and implemented by corporates and regulators. ICOs could create a systemic change in financial services, but look for the value in the underlying business models. Thank you very much. Thank you.
Thank you very much. What a fascinating presentation and what a lot to think about. We're running a little bit ahead of time, so we're going to take some questions because I think Ian's put a whole lot of really great concepts in front of us and I'm sure people have got questions. But the one that I really wanted to touch on was the last point that he was making and talking about a new phase of systemic change to global ecosystems using blockchain, AI and deep learning. And this notion of building a connected community beyond sovereign boundaries that blockchain enables. And if people haven't read about distributed autonomous organisations or community token economies, you need to start reading about that because this is going to be a really huge impact on the future of the way the world connects, both on fintech and on global problems. So they're going to throw some of the questions up on the screen so everyone can see them. And Ian, the first question is, will the slides be shared?
You find them on the Fintech Week?
Okay, they're on the Fintech Week website.
Or they will be on the Fintech Week.
They will be. Okay, what blockchain use cases do you see that may spread widely among banks and other financial institutions?
I think capital markets might be the first place that the ability of blockchain to deliver straight-through processing, the work that R3 as a consortium have done, the work using hyperledger technologies with the large financial services organizations will be probably the opening point. HSBC has effectively done a number of trials using trade finance as an example. So I think it's probably some of the more complex areas which might actually lead.
So thanks. Okay, Ian, the next question is, given your research into fintech investment, it's moving really quickly, with 34 billion invested this year, how much of this is driven by hype and speculation?
I think we're beyond the hype and speculation, which we saw when crowdfunding and peer-to-peer originally occurred. If you're going to put in $250 million into a company that already has somewhere between 1 million to 2 million worth of customers, this is the Revolut example, or it could be the TransferWise example, $280 million, that's serious investment by serious people. That is real. I think that the majority of the 34 billion is aimed towards very targeted implementations of business models which have proved themselves. So it's a different phase. The speculative area of blockchain, Bitcoin, and ICOs, right? The level of investment tends to be very, very small, 4 to 6 million, as I've illustrated, from existing financial structures.
So
that's what the hype is.
So one last question, we'll take the, have you seen any ICO that's delivered any form of value to its investors beyond a speculative price bubble?
The ICO I see which is real is the Telegram one, although that was a captured ICO, $1.7 billion. Their goal is to develop a financial services or a financial ecosystem around Telegram. And maybe if Telegram had floated, it would have got a similar sort of figure, I don't know. But that does seem serious. You have 400 million users. That's serious.
Okay, thanks everyone. So what a legend. Thank you, Ian. That was amazing. And I think he's going to be here. And